And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today, Wednesday, December the 1st. Hard to believe we're in December already. I'm happy to be back with you. My name is John Hoagland. Thanks for trusting me with your time. As always, we're going to be seeking context, looking for good risk management, and always remembering to stay patient in our trading. It's very nice to be back with you. It's been about a week and a half. Took a little bit of time, spent some time with friends down in Tucson, Arizona. It's a very nice time, good weather. Had a lot of fun, and we are back in the seat. Just spent a couple hours doing my homework yesterday as we just kind of getting back into the markets here. We have a lot of data due out this morning. At 7:15, the ADP Employment number came out. It came out a little bit better than expected, which is always good news. They were looking for 525 new jobs, added 534,000 new jobs. There was a small drop in the last, there was a small revision of down 1,000 from the last release of this number. Not expected to be impactful at all, but we are still waiting for 8:45 Central Time PMI Manufacturing Final, 9 o'clock ISM Manufacturing Index. Jay Powell is going to be speaking. He's been changing his tune a little bit, and it does look like he's going to get another term as Fed chairman. 9:30 EIA Petroleum Status Report due out, and 1 o'clock the Beige Book comes out. All of these again in Central Time, but that Beige Book comes out 2 weeks before the FOMC meeting. So we've got 2 weeks before the FOMC meeting. We have equities coming into rollover. We have currencies coming into rollover. We're just coming out of our energies rollovers as well as our treasuries rollover. It's going to be an interesting FOMC meeting because it's going to happen the day before the switch day for equities. It's going to be a lot of traders working on getting cheap trades, cheap rollovers done, trying not to become too directional, and FOMC. So we've got a couple of really good, interesting weeks to end up the year this year as we look at the markets this morning and take a brief look at the news. U.S. markets are early on a bounce, but still in range. They've had a pretty big volatile range over the past few sessions, and we are in the middle of that range, but there's hope that the Omicron variant won't be a big deal, apparently. Fed Chair Powell admits inflation not transitive, as if we didn't kind of expect that. They were trying to ease us into this inflationary period, I think. And I think we're going to be a little bit more hawkish as far as Federal Reserve policy moving forward. Crude prices bounced after prior to the OPEC Plus meeting, which is tomorrow. Lots of speculation that they're going to slow their output increases to avoid support a more of a supply situation. We've been more concerned about there being enough. Now they're concerned about there being too much. So OPEC trying to even out crude prices, and so far, boy, last week it was a pretty good week for cheaper crude. Let's hope that that we can maintain some lower levels so our energy costs aren't so great. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel. You can get notified when we do go live. I was sad to miss the coach's playbook yesterday. I saw that they had a really good session, and sorry I missed that. Sorry I miss a lot of things, but we do have to remember to take some time off. We're coming near to the end of the year. You know, each week I kind of encapsulate into one chapter into this year's book. And we're getting near the end. You know, we've got this week, 2 weeks after this, and then we've got the last 2 weeks of the session. Going to be taking a little bit more time off. I suggest everybody, you know, take a little bit of time off as always. You know, we always want to spend some time with loved ones for the holidays and everything, and just kind of review what you've accomplished over the last year. And you know, if you've been here all year, even if you've been here for just a couple of months, there's going to be lots of things to kind of account for as far as the good things that you've done, and try not to focus so much on the bad things. Focus on the positives, focus on the strengths, maximize those strengths, and at the same time continue to work on weakening your weaknesses or resolving your weaknesses if possible. Looking this morning at the VIX, the dollar index, and the 10-year yield, the VIX is down considerably this morning, 12%, down at 23.85. When I left a week and a half ago, it was down below 20. So I know we've seen some decent volatility. Some of that volatility possibly coming off today with that 12% drop in VIX before the open here. Dollar index about flat, 95.85. And the 10-year yield up slightly from yesterday's close at 1.47%. Always got to say good morning to everybody. It's really happy to be back. Brian, first in the room, you win the prize. Charles, good morning. Chris, good morning to you. Lacey, Chris says good morning. She's looking at me like, hey, thanks. Vince, good morning. Daryl, Rick. All right. Yeah, I'm back in the room. Glad to see everybody. Robert, Jorg, Dante, Jim, Johnny, Zerain, Ednelson, Felix Escobar, good to see you. Three Lions Insight, good morning. Andre, Rocker, hey, been a while. Love the new look. Rocker, it's good to see you back. Hopefully things are going well for you. Three Lions Insight, should be starting my funded account today. Past step 2, 3 weeks ago. Excellent. Yeah, it's good to start on the beginning of the month because the CME group data fees are non-proratable. So if you start at the end of the month, you're paying the whole thing anyway. So trade well, Lions. We're looking forward to your success. Ryan, Marek, Isaac, Brody, Ednelson, Mo, Theo, good morning. Dead letter opener, good morning, David, Isaac, Dr. VJ, Vince. Isaac, what time is the market? Recap is at 3 o'clock. 3 o'clock on the same bet channel. Stephen and Nelson, if I see a couple of new names there, welcome to the Market Forecast. Glad you're here. We are here to try and again, just puts a little bit of context over the marketplace, look for some potential areas of interest. And why don't we go ahead and jump into those? Let me get set up right here, and we'll have a look. Okay. Here we go. All right, so as always, just going left to right, no particular order, starting with crude oil. Volume has had a pretty decent jump since rollover. This was Thanksgiving here. Pretty decent volume on this push to the downside. We added 6,600 in open interest on this push down below weekly kickoff low. Now we've since somehow rejected below that. Open interest indicates new shorts, and we are again waiting for new info from the EIA today, OPEC for tomorrow. The medium time frame picture still looks weak. We're putting in lower highs and lower lows. Failure to hold these lows, the weekly kickoff low, which is 67.10, could bring us to a new continuation to the downside down to about this swing low down here, which is 60.77. So I'm going to be looking at weekly kickoff 67.10 is somewhat pivotal today. We're going to see in the 30-minute chart, the market did close down below that considerably yesterday, but we've had a pretty decent recovery back above that level. So if this begins to look like excess, it would not necessarily be a surprise. But I think, in the inside day that we've got an extended trading hours between yesterday and today, we may see just some posturing and hedging for what's going to be coming out with the EIA today. And again, with OPEC Plus meeting tomorrow discussing production. Here's the 30-minute chart. Okay, we're not open yet. If we get the chance, we're going to see if we can't catch that first minute, see if there's any opportunity there. Settlement all the way down here, 66.18. Okay, this is weekly kickoff low. That is that 67.10 level. The market opened, broke out below it, came back to it, closed, coming back towards it, closed below it, came back to it. Overnight, we've got a lot of longs in this market. Those longs already seem to be reconciling. The market had a chance at opening with a gap. Inside of a gap, it's looking less and less like that's a probability and more likely to open back inside range and value. It was a somewhat of a emotional day yesterday. There was a double distribution with some single TPOs left here. We're opening outside of those, so I'm not really looking for a repair type of day, which would have price kind of going from swing high to swing high, volume, high volume node high to high volume node high. You'll be looking for opportunities perhaps near the weekly kickoff low here of 67.10. Now, the only reason I like that is because it's so close to the point of control from yesterday, which is approximately 67.27. So, and last week's low. So this looks like a target-rich environment for us today, as kind of it was yesterday. I mean, the market opened, couldn't hold last week's low, couldn't hold the weekly kickoff low, and provided a pretty decent downside opportunity, which was swiftly rejected back up to the center of the range. Now we've got all these longs up here. So we're going to see if we can't catch that first minute after we kind of take a brief look first at the daily in the S&Ps. So here we go. I've got to set my percentages of pullback here in case we start heading that way. I'm not suggesting that is a thing that I'm really kind of counting on. So we've got a day 3 of a volatile balance. Obvious, we've got the balance low down here. We've got the balance high, pretty much the weekly kick-off high. Open interest, we added 30,000 in open interest on this downside this move to the downside yesterday on some pretty decent volume. We're not seeing that kind of continuation. We have to remember we are coming into rollover. Okay, next Thursday is switch day. That's the 9th of December. So basically a week before the FOMC meeting. So we got to be kind of thinking about our longer time frame traders trying to get a cheap roll instead of becoming directional. Of course, they will become directional if forced. Right up here on Thanksgiving, we ended up putting in an island top. There's a gap up to it, small gap, and a small gap away from it in regular trading hours. This was our last island top that we put in, and the market continued to push lower on it. Better than a 5% move to the downside. Not suggesting that's going to happen today. However, we do have an island top up here, which again is a pretty decent reversal pattern. We are really data rich this week. Oh, yeah. Lacey is also reminding me we've got that 1 minute in crude oil. Okay, so it looks like the 1 minute, looks like the opening range here is so far the high of the session. It's given us an opportunity to take this short. The range, opening range is 67.80, so 21 ticks, pretty substantial opening range. Don't forget that the market is opening in range and in value, which may take some of the urgency to trade early out of the picture. So I'm not really thinking about jumping into this because, again, it's a 21 tick opening range, pretty substantial. If we get the opportunity to come back in the opening range within the first few minutes, that's something I might consider because, again, it allows me to limit my risk. Now, here's the move back up. If we're looking to take the short, which we opened, took the low before we broke out below the opening range, this gives us an opportunity to try and get into that short much cheaper. We're gonna be putting our stop a few ticks above the high of the opening range. And if the opening range does hold and we continue lower, we've got some pretty decent potential for some 2, 3, 4, 5 times the risk on a move to the downside here. But again, we've got to hold the opening range. We're just going to watch this for just a minute to see how this plays out. Because when the market comes back to halfway inside the opening range, that can be our opportunity to limit risk to about 10, 12, 15 ticks instead of 25 or 30 ticks to see if we continue the move below the opening range. Here it goes. Does it go? Well, we're going to have to move on here. Doesn't look like there's much confidence here so far off the opening range. So let's go back and see what's going on with the S&Ps. Maybe we'll go back and take a quick look at that. So back to the daily 3-day volatile balance. Island top, data rich, rest of the week. Without any new bad news, what tends to happen? Well, our traders have pretty short memories. Without any new bad news, it's likely that this market can just continue its move to the upside. Don't forget the resilience of these markets. Open interest added 30,000. That piques some new interest. Overnight longs in range. Here it is. Settlements all the way down here. Okay, settlement 45.66 quarter. Put that on your charts. You can see all of the overnight activity is pushing price higher and higher. Our overnight weaker hands longs, our weaker hands traders are holding longs. If they don't get continuation, if they don't get a chance to get a test of weekly kickoff high here, 46.55. If the market doesn't continue to move higher at some point, they may get a little bit nervous and push this market lower. What kind of market state are we looking at? Well, we're looking at a market state that's been putting in relatively consistent lower highs, relatively consistent lower lows. So I'm looking at this market as a kind of a market that I'm looking to not only sell strength, but perhaps even buy weakness. Weekly kickoff low looming just below. How about the Nasdaq? Nasdaq, no island top in the Nasdaq. Did not happen. Fourth day in a volatile area of balance. Again, no island top. Open interest increased. Activity direction is difficult to read because remember we are coming into rollover. So we've seen some increase in open interest in the equities. Again, perhaps difficult to read because of rollover. Volume higher yesterday. Also, perhaps harder to read because of volume. Because of rollover. Excuse me. My goodness, been out of practice. The 30-minute chart indicates something very similar to the S&P's. Settlements all the way down here, 16,150.50. All of our overnight longs are moving that, moving price higher, indicating our weaker hands traders are holding longs before the open. My real focus, I think, in the equities is going to be on the extremes of the balance area. When we're looking at the extreme of the balance area, we're looking at somewhere up here around 16,500, 16,450, I should say, 16,450. Well, the lows from last week certainly is kind of the extreme of where price has been for the last few sessions. And while we're in range and in value, it's largely going to be short time frame controlled. So again, one of the first things I'm going to look at this morning is when the equities open, do we continue to push up higher or do we kind of hold here and make all of our overnight longs a little bit nervous? I'm looking to buy weakness. I'm hoping that the market is going to give me an opportunity using the shorter time frame, weaker hands longs, using their exit from the market to create a better trade location for me on the long side. If I can see this coming, I can even take advantage of the move in the opposite direction from the overnight activity and then see if I can't find a decent level with which to work with. Now, there's an old weekly kickoff level right near settlement, which is right at the point of control on a high volume node. Given the opportunity, this is something that I would look at for a potential entry, but it's again short of the real extremes that I would really be focusing on in that regard here in the Nasdaq. Let's see what all right, we were kind of right. A 21 tick opening range or whatever it was came back to the middle, tried to give us something. We weren't very happy with the confidence here. So I did not do anything here, wasn't going to do anything here because I didn't see the confidence. Had we taken the short, we're now stopped out. What's it look like on the 30? I'm just going to go back here and take a look. So we were kind of counting on that opening range to give us some chance for our overnight longs to get a little bit nervous. It didn't happen. They didn't get nervous. Matter of fact, I think this area down here is looking somewhat supportive. When you look at it, it's a target-rich environment. We got weekly kickoff low. We got point of control here, 67.27, and then we've got last week's low. So lots of convergence there. All right, back to where we were. Let's go now look at gold. All right, so gold coming out of rollover. We lost 11,000 in open interest yesterday on a push down toward weekly kickoff low, which ended up being somewhat supportive. How close did we get to it? Low 1771.20, within 12 ticks of it on the move to the downside yesterday. In losing open interest, Volume was pretty good, but again, this is due to rollover that it looks at that great. But losing open interest against a support level like this indicates sellers backing off. Sellers backing off. Now we've got them moving the opposite direction starting today. Weekly kickoff low, I'm looking at as a pivotal level. So, we've got largely range-bound activity, and we're still kind of in most of that range-bound activity. I'm not looking at this market. I mean, week before last, we had a pretty decent upside move, didn't hold. So here we are back in short time frame land, looking for our opportunities in smaller ways. Here's the 30-minute chart. So yesterday's range push down to test weekly kickoff low, rejected. Settlement 1776, isn't that patriotic? 1776.50. Overnight longs holding. We are in range and in value, and we are opening in an area that could indicate possible repair. We've got a double distribution. There's single TPOs here, another distribution of time and volume down here. When we open between them, there's a really good chance that one or both of the high volume nodes above and below the market will be revisited to see if there's still business to do there. So I'm going to try and stay patient. Didn't see that there was great opportunity on the open, again, because we were in range and in value. Stay patient today in gold. Take a look at the euro. So, hey, noisy, Lacey. Somebody's probably walking a dog out back, so she's getting a little perturbed. I know, Lacey. I know they're out there and you're not. It sucks. I know. Okay, so back to the euro. Just really kind of holding nice downside momentum. And finally, we're getting somewhat of a decent kind of pullback. So we get through the weekly kickoff low has been there for 3 weeks. It has now been supported last week and continuing to try and create short time frame structure to the upside. I am so sorry about the dog. So, she keeps breaking my concentration. Again, it is entering rollover. Lost 11,000 open interest on an up move yesterday. But again, that can be somewhat rollover related. Next Thursday, December 9th, is switch day, same as the equities. So we're going to have a lot of traders that are looking to roll those positions over from March into December, being more focused on getting a cheap roll than being directional. We've got an inside day and extended trading hours from yesterday to today. Take a look at the 30-minute chart. Kind of a similar situation to gold, except for look at where settlement is. Settlement is 113.26 and a half ticks. Where have we been all night? We've been just bordering. We've been magnetic towards it. There's no overnight inventory, which lends to what? Repair. We've got a high volume node here. We've got our point of control, which is our high volume node down below. One or both of these high volume nodes will be targeted and revisited today with high probability. We can't say 100% one way or the other, which is going to be the one, or if both. But it's a high probability that at least one of these high volume nodes, and those nodes are 113.7290 and point of control down below here, 1274.90 approximately. We don't do 90s here. We just do halves. So let's call it 112.72. And then outside of that, we're going to be really kind of focusing on yesterday's range extremes because, I mean, look how close yesterday came to completing a weekly, point of control to point of control move. Okay. We're just kind of hanging around last week's high. Not a lot of a big opportunity there as far as we can see at this point. To the 10-year. Rates popping up a little bit, of course. That's going to happen, especially when the equities get hit. We start taking money and putting it into safer instruments like the bonds, like the 10-year. Weekly kickoff respected yesterday, the weekly kickoff high. Volume and open interest still rollover blurry. We just really kind of rolled last week, and so we're starting to see the volume really come into the March contract now. Lost 47,000 in open interest on this move to the upside, but the vast majority of that was just December contracts evaporating due to rollover. So again, it's very difficult to read during rollover. Here's the 30-minute chart. If we're going to be looking for short time frame information, here's our move up to weekly kickoff high yesterday. Pretty stiff rejection off of that. Pretty nice move. Settlement is all the way up here at 130 and 26.30 seconds. We're kind of holding some overnight shorts. Has there been enough consolidation to you kind of reconcile those overnight shorts? Last week's high is in play right now. We've kind of opened and are holding outside of range from yesterday. Acceptance of range from yesterday could increase the probabilities of a move to the other extreme of value, or at the very least back up to the weekly kickoff high here, which is 131.05. In range, close to value, staying patient. We've got a little bit of a channel here. We've got lower lows, got lower highs. If we can get above what approximately looks like last week's high, that may break this trend line to the upside here, and then that may give us the opportunity to look to higher levels. Nat gas, that fascinating nat gas. I'm so glad we added that because I've really been enjoying seeing what goes on with that. So what are we doing here? We've got lower highs. We've got lower lows. When we first started looking at this product, it looked like this product was going to the moon. And ever since then, it's just been kind of drifting off to the downside. Weekly kickoff low is currently being tested and is somewhat pivotal. Okay, this is the daily chart here. So the next swing low could be all the way down to $4. $4 all the way down here. If we accept on below this, there's plenty of space for this market to go ahead and do that. We're through with pretty much rollover. We lost 12,000 in open interest yesterday on this move to the downside. If we start to show acceptance below weekly kickoff low, and we remain, it would indicate that higher open interest might be new selling coming in. Seems like yesterday we had some long liquidation, some longs probably taking some heat and getting out of those in losses, but that tends to take selling power away from the market. What we're looking for here is we're looking for more new business to come in. We're looking for new participants to enter the downside the downside auction process so that we can continue to see this market moving lower. So pivotal is our weekly kickoff low, which is $4.42, holding below it now. Let's take a look at the 30-minute chart. So no real overnight inventory until almost the London session starts just before that. The market pushing and trading right to weekly kickoff low, which is going to be dangerous. We do have a gap, so we don't have, if we can't close the gap relatively early, we start to look for opportunities to sell against the gap and continue this market lower. It seems to be rather magnetic towards weekly kickoff low, which tends to be a short below and long above type of situation. But again, we've got the gap that's telling us, well, we're not really seeing a move to the gap close, which says if we can't close that gap relatively early, and that is a subjective term, we're going to be looking for opportunities to short this market. If we get up and close the gap, it may still be an opportunity for us. But because we've opened outside of yesterday's range, if we start to show signals of acceptance of yesterday's value area, that takes out the short probability and increases the probability of acceptance inside of value, brings price back to high of value from yesterday. Now, is that a big move? Is that a big enough move for us to really try and jump into? I'll leave that for you to decide. But again, with no gap close, an important inflection level in the Nasdaq, this is opportunity. Be careful. Be careful. If this market just becomes magnetic towards this important inflection level, it can chop us to ribbons. And we don't want that. Right. So, Stephen opted for the pro account after passing the combine. It's good. Jim, yes, there is a group coaching session today. Thank you for the reminder. I'm going to put the link in for that here just in a second. Good call. All right. So there is the link. Go ahead and join up. That's at 1 o'clock Central today. We'll have the group coaching session. I don't have anything emailed in just yet, so it'll be a nice free session. And we'll just talk about whatever's on your mind. Janus, Terrence, good morning. Passing step 2 today. Congratulations, Terrence. Take your time. We are looking forward to your success. James, good morning. Juan, Sean, Trading Research, good morning. Dog. Sorry, Isaac, if my dog woke your dog. Yeah, it's hard to walk the dog early in such early days. Yep. Lacey may have been saying that dead letter opener, 100%. Jim, looking forward to seeing you in group coaching. Looking forward to seeing you all. We got about 4, 5 minutes, 6 minutes here before the equities open. I'm going to take my deep breath. Going to be humble, grateful, and creative today. It's my first trading day back after some time off. I'm going to make sure and stay patient today. I'm well aware I'm going to miss a few things, but I'm probably going to miss a few things that might not be that good. Make sure the market's telling you what to do. If you're out there looking for trades, you're going to find them, and they may not be the ones that you're looking for, the ones that you really want. When? My pleasure. Looking forward to seeing you in the markets here shortly. I'm going to run down to the pit here and the metaphorical trading pit, that is. And we'll see you there. Trade well. See you at group coaching, 1 o'clock Central. Trade well this morning.